I don't want a 10-year bond at 1.5% yield when I can get an inflation hedge with a house and so much better return. And that's another big thing to me is inflation hedging. I mean, the Fed's printing money very fast, and whenever I talk about this, my wife rolls her eyes at me. But it's so nice to have that leverage and know that I've got a fixed rate mortgage, and I'm going to be paying it off in dollars that aren't as big of a hit every year. So Matt, I love the inflation hedge aspect of it.
You're amongst friends here. Let's let it out. What does inflation hedging mean? What are the exact, like I'm asking for a friend here, right? Like I'm not, I've heard inflation hedging. I've heard Greg kind of go through it. Tell me what is going on that makes that, like, explain to me the market dynamics of why you talk to your wife about inflation hedging too much.
Okay. Well, so the national debt is $28 trillion. We took in about $3.5 trillion in tax receipts this year, but spent $8 trillion. Now I know that's a crazy year because of the pandemic, but we usually spend over $1 trillion. And there's just no way to pay this money back in any sort of way without inflating the dollar. And it's been going on forever. We've been having inflation, but we're getting to a point where the debt to GDP ratio is so high, and you've got unfunded liabilities that they're going to have to devalue the dollar, and they're doing that right now. But that properties and having leverage gives you a hedge against that. Even if your property doesn't keep up with the rate of inflation, if you've got 4-to-1 leverage on that property, you can still end up on top. And real estate's been an inflation hedge for a long time. And I think we're headed towards a period where it could potentially be something like the 70s, where you have real estate and commodities do really well and outperform other asset classes like the stock market, even though the stock market's had an amazing 13-year run. But all good things must come to an end. And I'd love to be balanced in a different asset classes that could outperform over the next decade. Because I like to keep my horizons more like a 5 to 10-year horizon too.
Matt, I just love everything you're saying about inflation hedging. It's like the greatest thing. You know, it's something that many people don't think about. It's one of those like profit centers that's kind of hard to quantify for folks. It's not intuitive, but it is so powerful, especially if you have that, call it that 10-year horizon, right? If we think about, betting on, stock prices to go up, or, even in speculating on home price appreciation in the short run, right? You gotta have a long-term outlook on appreciation in the short run. It's kind of speculative. One of the things that we have a pretty good handle on, has been documented year over year over year over the years, is that inflation happens, right? And when you have debt, when you're using debt and you're in an environment where inflation is happening, no matter what the prices of real estate, no matter what the prices of the stock market, no matter what happens, you're winning. Because what Matt is talking about is the debt that you're paying back tomorrow gets easier. The dollars that you're paying the debt back with tomorrow are less valuable dollars. And so you win when you hold debt in inflationary times. And the longer you hold it, the more you win. So it is one that is probably more, you can bet on it more than other profit centers. You really can, but nobody talks about it, right? But except you and your wife and me.
You're also getting access to instruments that no one in their right mind would give you. If you try to get a private loan right now, 30 years, you're not going to get anywhere near an interest rate right now. So you're getting these special debt items that that no private person would give you, because they know it would be crazy because they'd lose a ton of money on it. But the government is giving you these loans. And so it'd be great to take advantage of it, because if you see, people with lots of real estate have tend to do very well throughout the years. That's one thing that's been timeless.
You were just talking about this ahead of the call, right? Like right now that you said you get access to these instruments, right? Like you're a savvy investor, and you are in the market, and you're in commodities, and you're in real estate and stuff like that. And there are instruments in the stock market, right? Like you were kind of telling me a little bit about puts and how like you're able to hedge against stuff in the stock market to a certain extent. Can you kind of explain the dynamic of, you know, how people are able to hedge in the stock market versus what hedging we're talking about right now, right? Because I hear the term hedging and I just kind of like put it all in the same place. And when I hear hedging with puts versus hedging against inflation, can you kind of explain that to me?
Well, just kind of how you would hedge. People see the stock market as an inflation hedge also,
Yeah.
but it hasn't always been that way. We've had kind of steady inflation for a long time, but when inflation kind of runs off, the stock market doesn't work as well as an inflation hedge. You have I guess the 70s would be the prime example of that. Stocks really didn't do well in nominal sense in inflation. And then we talked about leverage. You know, if you can have options trading, thinking, okay, well, I'm just going to buy long dated options, but with inflation, things can get pretty volatile and you can get stopped out of your options trades. But as far as hedging against inflation in the stock market, I have some things like commodity stocks, just because I can kind of wrap my head around commodity stocks over some of these tech stocks. I get the whole supply and demand aspect of it. So I guess I have some mining stocks, like large cap mining stocks or ETFs that hold a bunch of mining stocks, just kind of keep safe. I don't have time to like pick out all the great stocks, but and like copper mining and industrial metals and things like that.
Where do you? Oh, sorry, Greg, go ahead.
Well, one thing I was going to add is, you know, when Matt's talking about hedging in the stock market, correct me if I'm wrong, Matt, but you're talking about you've got one investment here. You want to kind of, you know, maybe take some money off the table there, right? So he's talking about putting more money into something that, you know, might be a competing kind of stock or it's like a counter to the original investment. So he's putting more money out to basically take some chips off the table so that if it goes way up, he's not going to make as much. If it goes way down, he's not going to lose as much. So, but the concept is he's already got his investment here in the stock market. He's putting more out in the stock market. That's how he's talking about hedging. When we're talking about hedging an inflation hedge for rental properties, it's not the same thing. It's better because, you know, if we're talking about owning a rental property, what we're talking about is you don't have to put more money out to hedge. You've already got that rental property. And as inflation tends to happen, home prices tend to go up and rent prices tend to go up. So you have a built-in hedge against inflation rather than in the stock market. If you want to hedge, you got to make another investment to kind of take some chips off the table. That makes sense? Did I get that right, Matt?
And also something to keep in mind is that having an actual house, you have actual goods in that house that help out with inflation. Like lumber prices are through the roof right now, and so are copper prices, and that's making home building a lot more expensive these days. So that's another way to hedge.